Okay, and so for our presentation today, we're going to have Aaron Klatt. He's going to talk about his journey in real estate and just how he got started. And I think he's going to talk about some of his early mistakes. So that's going to be really fun.
So I'm going to talk about primarily my first investment in San Antonio, as that's what's relevant to the group. So let's get started. I started here in the Inland Empire, California. It's east of Los Angeles. It's a bit cheaper, and houses are more standardized. When you get into Los Angeles, it'll be some weird, funky stuff that's 100 years old, cramped, things like that. Most of the stuff out here, it'll look like that. When you buy it, it has like a 5% cap rate, but because of some of the property tax things that California has, that can grow over time. And then the rent obviously keeps up a little bit more than the property taxes do compared to Texas. So I decided to look at a state in 2018. Prices kept rising. So for example, that house in the previous photo was $250,000 in 2014. In 2018, that's pushing like 330, 350. So it makes it more difficult to scale, and rents weren't rising as fast as the prices were. And always there's that little voice in the back of your mind that says, if there's a big earthquake in California, you don't want everything to be out of commission for an extended period of time. It's probably good to diversify locations. So when I was looking at markets, I looked at a whole bunch of markets. I had a whole like March Madness bracket and everything. Main things is I wanted something that wasn't too different. So I didn't want to have to deal with snow, freeze thaw, all of that stuff. But I also didn't want a market that would be declining in population like St. Louis or a Cleveland, because I'm going to hold these properties for 20, 30, 40 years, hopefully. So the last contenders were San Antonio, Laredo, El Paso. I chose San Antonio just because it was bigger than some of the others that I was looking at, and it was really starting to pick up with growth. So the first thing I did was I had to find people in San Antonio that knew what they were doing, hopefully. And that was a little bit of a culture shock. So what I was used to in California for management was 5 to 8%. So if it's over like 15, 1600, you can get it done for 5%. If it's less than that, you're looking at 8%. Not the case in San Antonio. Pretty much every company that I've talked to was 10% management fee. And then a lot of them had other fees like lease renewal and the maintenance coordination, which I was just like, that's what your 10% is for. So when I chose something that was similar to California, which in hindsight, I still think was the right decision on paper, but you just got to vet property managers. You got to be the math police. You got to do everything. I did use a realtor for my purchase in San Antonio. They were associated with the property manager. That one was not so great in hindsight, as we'll see. So what I told her was I wanted something around 150,000 or less, at least 3 bedrooms, newer than 1960, and mostly single family, because at that time especially, and I think it still continues, single family offers a little bit better than return for a higher quality property than a lot of multifamilies do. And I was looking for at least 6% or better cap rate, make it worth my while to do out of state. So what she told me to avoid the Glen and Kirby. To me, that's like, you don't tell people where not to buy if you're a realtor a lot of times, but that was where the property management company wouldn't manage. So, okay. She also told me foundations are a big deal. Well, what does that mean? Come to find out later that means if something has a foundation problem, it's probably somewhere between $5,000 and $15,000 to fix, not $40,000 like it is in California. So that was something that I definitely missed out on. Some properties, they would be priced $30,000, $40,000, $50,000 below what they were valued at after you fix everything, but they had a foundation problem. If I'd known that, I would have bought those properties. She also told me that some of the cities that aren't San Antonio but are part of the metro had lower tax rates in San Antonio. Not true all the time. So Converse, for example, it's pretty much the same as San Antonio, even though she told me it wasn't. Now, again, super easy to look up if you know where to look. But coming from California the first time, I didn't know where to look, and she didn't tell me. So some of the things that she didn't tell me, foundation repairs, garage conversions are everywhere. Everywhere. I think most of the time they actually hurt a property's value, especially curb appeal. People want a place to park their cars. If it never made sense to me that in a place that gets big hail, you don't want to have a garage. So she would also send off-market deals that she found. They were just one of the national wholesaler brands. That's fine. I'm good working with her through a wholesaler, but she needs to tell me that, not, hey, I found this, I'm going to mark it up whatever I feel like, and then throw it along to you and hope you buy it. So I visited San Antonio. I had visited before, but I visited like specifically for real estate investment purposes in April of 2018. Saw probably 20 houses or so. And she got right to work being a salesperson. So this was one of the houses that she like, this is a good house. I think she put in an offer. And I had her do estimated rent. And it came back at 1,100. And the house is listed at 145. And even me doing the math, that was not good enough. It was in a decent part of town, had the lower taxes, but for the square footage you were getting and the price it was at, it just wasn't going to work. And this is when I started to kind of have doubts about her and how investor friendly of an agent she was. So when I got back into California, I would look at the MLS every day, things that she sent from the wholesaler as well. And then this one came up and I had her do a video walkthrough. So do the video chat, which everybody's super familiar with now, thanks COVID. And the house actually looked pretty good. The MLS remarks stated it needed a little TLC, and I had her do estimated rent again. This time she came back at $1,450. Both of those are important, as we'll see in a minute here. So house looks pretty good. These are the MLS photos from when I bought it. So I'm thinking, needs TLC? What are you talking about? It looks pretty good to me. And she walked through and she said it looked pretty good to her. Now, the first problem was the rental estimate. This is where she pulled her comps from. She pulled her comps from MLS. Great, perfect, nothing wrong there. She stayed within subdivision. Great, perfect, nothing wrong. These are the comps she pulled. So some of them they're all smaller. Some of them more so than others. And the first one, great. It was smaller, but it still explained the neighborhood well. The second one, also smaller, but it was a 1990s build instead of 1980s. And that didn't show up anywhere in her analysis. And I should have looked at all these comps, but I didn't. I trusted her to be reasonable with the comps she selected. The big problem, comp number 3. So this one actually on the same street as the house, but built in 2018. So brand new at the time, all kinds of upgrades. It was the closest in square footage. I think she was anchoring pretty heavily in her estimate to that, but nobody bothered, me or her, to look and see what the house actually was. Big problem that threw our rent off by quite a little bit. When I actually finished closing and had somebody go, the person who was actually going to lease it, it was $1,375. So a miss by $75, which isn't super big, but is significant and avoidable. What's a little TLC? So when she went, she told me the fence is leaning, some interior paint, and some minor siding rot at like the bottom of the garage door on the sides. I'm like, okay, that's great. That's $3,000 to $5,000 max if something is going terribly wrong there. Reality, not so much. So no garage door openers, no overhead lights. It needed a full exterior repaint. She didn't open the cabinets under the sinks, so there was leaks under the sinks that had kind of rotted away some of those cabinet bottoms, and a whole bunch of little ticky-tacky things along the way that really you just get a feel for when you're in the house. It's not anything that stands out. It just feels, oh, that kind of needs repair. Oh, that kind of needs repair. And I didn't get that from her on the video walkthrough. And part of that is the limitations of what a video walkthrough can bring you. But part of that is building that trust with the realtor and knowing what's important to you, what's, yeah, no problem, we can fix that. So the offer. I wanted to offer on it because by what she had told me and the video I had seen, it looked like a pretty good deal. I had a pretty strong offer, but she was still pushing for that higher price because she wants her sale, obviously. I didn't send her to a ton of listings. I probably sent her to 4 or 5 total after I got back into California, but she wanted to be done, it seemed like. So this was in Converse, and she had told me the tax rate was low. So I was thinking it was low like the other one was, where it was outside the city of San Antonio, just county of Behar, and was 2.15%. Nope, 2.6. So I thought I was getting a much higher return than I was. There were more repairs, tax rate was higher, rent was lower. So I was still doing better than California, but not by as much as I thought I was. And some text messages like, she's super happy. And I'm reading through the contract for the offer, and I noticed something's a little off. So under option fee, she had written in $5,000 instead of $100. And California me goes, what's an option fee? So a quick Google later and like, yeah, this probably shouldn't be $5,000. And the following conversation ensued, as you can see on the right there. Another opportunity of playing math police. When we went into escrow, had it all set out, seller's paying for title insurance. Escrow's the one trying to pull one over this time. So $1,100 mistake on their part that a phone call fixes. That's one of the most important lessons, not just in San Antonio, but everywhere. You are the math police. Make sure people are doing their math correctly, because a lot of the time they're not. Just this year alone, I haven't bought any new property yet, but I've saved $1,000, $1,500 just by being the math police. Property managers make mistakes. Escrow companies make mistakes. Check their math. Another thing that was a bit of a culture shock for me was in California, insurance premiums are lower. We don't have mega hail. We don't have super severe windstorms. In San Antonio, that's different. So even though the property is worth a lot less, the insurance premium is a lot more, sometimes as much as double for a house that's worth half to a third the cost. And shopping around insurances, I was kind of getting a little discouraged, like, what is wrong with this thing? Is it in a flood zone? That's just the way it is. And it's a mindset adjustment for how you have to look at these things and how you have to evaluate them. But overall, even though it wasn't the best thing, and it definitely wasn't a good experience with a realtor, it still turned out okay. So over 2 years, it's gained $35,000 worth of value. But if you take out the 8 or so that I put into it initially, that's what, 27 in 2 years, and rented for $120 more than started at. And today it's doing fine. Tenants in there, tenants paying rent, so can't complain.